So we have around 20 people online and another 10 here. So we'll start now. So basically, before we start, I would like to acknowledge the Pedijo people that are the traditional custodians of this land. I would like to pay my respects to the elders, both past, present, and extend that respect to other Aboriginal and Torres Strait Islanders who are present here today. So, welcome to the third edition of our seminar series. And today we have Professor Hal Pawson. He's presenting his work done with Chris Martin on impact of COVID on renting, housing, and homelessness. So Hal needs no introduction within CFRC. He heads our city housing program, which works on like a wide range of work relating to governance, finance, development, affordability, and operation of social housing and private markets as well, private house market. And I've been looking forward to the talk for the past week, so over to you now.
Thank you very much, Bala. And nice to be presenting to a lot of people, even if they're invisible to me, because I have to look at the camera and hopefully you can see me and the screen. So Chris Martin's name appears on the screen as well as my own, but also Sean Thompson and Alistair Sisson were our other colleagues who contributed to this project. The report that I'm going to be drawing on also is co-authored by a couple of UK colleagues, but I'm having trouble with my clicker, so I can't show you that just yet. Can you enable that, please? So this is a published report that is a first output from a research project which is ongoing. There will be a second report coming out later this year. It's a piece of work that is undertaken under the Poverty and Inequality Partnership, that is a joint enterprise of UNSW and ACOS, the Australian Council of Social Service. The project really kicked off in the middle of 2020. This report came out in February, and as I say, the research continues, and there will be a second report later this year. So in this presentation, I'm going to cover these 7 topics. I'm going to start by talking about the changes that we've seen in the housing market, particularly the rental housing market, during 2020. Really, the end point of our analysis is September 2020, so it's not right up to date. It was current at the time we were publishing, or we were preparing to go to publication. I'm just going to give a short summary of the emergency responses to COVID that were protecting incomes and housing situations. And then I'm going to go into a little bit more depth briefly about income support, and then at slightly greater length about homelessness and rental housing policy, and very briefly talk about the prospect of, or what's coming out of this, and housing policy responses that have been prompted by the pandemic for the future rather than as an emergency response. So just to say something about the housing market first, when we saw this suddenly charge us over the horizon, there was a tremendous amount of expectation about, or realization that this was going to potentially have enormous impacts, not just on the economy, but on the housing market. And the first economic effects in Australia were over 1 million jobs, or around 1 million jobs lost right at the beginning, 50% increase in unemployment, over and above the number of people who were basically laid off work but continued to receive income through the JobKeeper program, which for anyone from another country is what you would call the furlough. And the income losses were expected to create a situation of intensified mortgage and rental stress very quickly as a result. And so the expectations around the housing consequences of this were mostly quite lurid. The possibility of mass evictions as a result of renters suddenly losing income, especially considering that very large proportion of low-income renters in Australia are already in a situation before the pandemic where their income was barely enough to enable them to keep up payments. And of course, had that occurred, then the homelessness would have surged as a result, and also the associated risk of house prices crashing as a result of landlords needing to be in a situation of possibly forced sale. All of these things were anticipated, and a very sudden realization that this could occur. And the general expectation around the impact of the shutdown on property prices and reduction in employment was that there was going to be a very significant downturn in property values. The worst case scenario for the Commonwealth Bank was a 32% house price drop over 3 years. One or two forecasters didn't take that line, but they were pretty thin on the ground. So what do we actually see? Well, we actually did see major impacts, very major impacts, but not entirely what was expected. And housing, in terms of the house sales market, the market has been far more resilient than was expected by almost all of the forecasters. So there was a brief reduction a brief hiccup, a brief lull. You can see from the graph. There was a red quarter when there was a little bit of a reduction, but that wasn't particularly. Prices had actually been dropping before that, and then there'd been just at the start of the pandemic that had interrupted what would have inevitably been, I think, a big increase. But we're back on that trajectory now. So that wasn't expected, and what we've seen subsequently in the last 6 months is what to almost all forecasters is something that was not expected. That in March 2021, prices across Australia, house prices across Australia, rose at a record rate, a record for a number of decades, at I think 2.8% in a month. So the annual rate of increase is 20 times wage growth. Within that, though, there are some interesting and I think quite important nuances that there's been quite a significant divergence in different geographies and different house types or different property types, which I'll come back to in a moment. But what the kind of underlying cause of the stimulus to the market that seems to have been dominant has been most analysts are saying that this is the result of interest rates falling even further at the beginning of the pandemic, and that's on a trend that, as you can see from the graphic, has been pretty steady in that direction for a long period, but and was already being reduced. Interest rates had already been reduced again ahead of the pandemic, and because the economy as a whole was quite weak, but were reduced again in mid 2020, and that meant that mortgage holders saw an average 5% reduction in housing costs in the first 3 months of the pandemic, which was a nice bonus for people who weren't probably expecting that. And within these changes, there have been these divergences between different property types and different regions. But what I'm going to do here is switch from looking at the house sales market to the rental housing market, which has been covered a lot less in the media. It's not drastically dissimilar, but it's quite important for the purposes of this report to focus more specifically on this part of the market. So what the graphs are illustrating is that there's been, what we saw is a really sharp divergence between flats on the one hand, or apartments on the one hand, and houses on the other. You can see it in the top graph, and also regionally between cities, particularly Sydney and Melbourne, particularly the inner areas of Sydney and Melbourne, where rents fell significantly. The green line, all of these lines here are parts of Melbourne, whereas the blue line is regional Victoria, which was going off in a completely different direction, and the patterns in New South Wales have been similar. So moving on then from the market to talk about policy.
What did they tell you? They make them learn all these words.
I can't hear that. Shall I carry on?
Yes.
Okay. So to move on from market changes to policy changes or policy innovations, this is our summary of what we think are the most relevant policy changes that were introduced at the start of really pretty quickly at the beginning of the pandemic in March 2020 that cover income support and housing and homelessness. So the top four are federal government innovations, income support, topping up of or a higher payment for people on social security benefits, and a furlough type scheme called JobKeeper, which is a wage subsidy to employers. And then these two, perhaps less important but still significant innovations that took place at the same time. One, the lifting of rules which restrict the ability to dip into your retirement savings if you're below retirement age. And fourthly, again, very important but even more hidden, the way that the Reserve Bank created a facility to enable mortgage lenders to take a very tolerant attitude towards people wanting to have a deferral on their mortgage loans. And that was a very significant move that really cushioned the house sales market or the property market. So the four categories at the lower end of the table are things which are more directly related to this talk and which we're going to say more about, which are restrictions on the ability to remove tenants who aren't paying their full rent or aren't able to pay any rent, the restriction of rent increases, rent relief, which is a smaller one but still significant in some states, and number 8, homelessness emergency accommodation programs, which 4 states enacted at large scale. So very briefly on income support, a little bit more detail. What we've got there is the Australian JobKeeper furlough scheme, which was similar to what was seen in a number of other countries, which is a $1,500 a fortnight payment through employers in relation to employees who are full-time or part-time. And so some part-time employees were being paid significantly more through the furlough than they were previously. But it was a simple, quick, easily implemented package that sort of decided that that was the priority. So we had 3.5 million people who were supported by JobKeeper, even in September, even 6 months later when the numbers had started to actually move down. This coronavirus supplement was an extra payment for people on social security benefit or certain social security benefits, which effectively doubled the pay of people on the basic unemployment benefit. And there were over 1 million recipients of that scheme in the middle of 2020. Casual workers who were recently taken on by companies were not part of this, were not entitled to the wage subsidy scheme. Some of them could still receive the social security benefits as long as they were Australian citizens. But if they were not Australian citizens, then or not permanent residents, then they were excluded from both of those schemes. So that was a group that was not really covered, and was and probably they have done it much tougher than most other people. All of these both of these major schemes have been wound back since September 2020 to the point where they basically both ended at the end of March 2021. The impact of these schemes on different cohorts of households in the sort of ranked by income was really very dramatic as well. So in the first 3 months of the pandemic, or to May 2020, what we're doing here is looking at the Australian population divided by income decile, and a really remarkable increase in the average income of people in the lowest decile. 40% increase in average income as a result of mostly as a result of the supplement to Social Security, I would say, perhaps a little bit through the furlough. Whereas the upper income deciles, certainly from 7 upwards, they were the ones where incomes generally fell in that initial period. So there was at least a short period where there was a remarkably pro-equality outcome of these emergency measures. Just to say something very briefly about mortgage deferrals, this is, as I mentioned before, something that was enabled by the Reserve Bank, but offered directly by mortgage lenders. And what the graph is showing you is the number and also the percentage of mortgages that were in deferral running through from March 2020 through to December, which reached a peak pretty fast in April, which was around 10% of all mortgages were in deferral at that point. So that's a big number, and it lasted nearly at that level for several months through to around September, but it's fallen away now, really quite near to elimination since then. But it enabled the homeowners and landlords to ride out the crisis, and was a very effective way of preventing any expectation, or all the expectations around a surge in repossessions were avoided as a result. And special access to superannuation savings I mentioned as well, up to $20,000 being allowed to withdraw up to $20,000, targeted at people losing employment through the pandemic. It was taken up in a big way. It was taken up by 3.5 million people. $36 billion in savings were withdrawn. And in a lot of cases, that was enabling people to stay ahead with their rent payments. And some real estate agents demanded that that's something that you as a renter should do before I, as a landlord agent, will offer you any possibility of reduction, which was, I think, very sharp practice. And it was also the whole thing was controversial, bearing in mind that the people who would be needing that kind of assistance are probably the ones that have the least to draw on in the first place. So there will be a long-term effect of this, which will be the opposite of the pro-equality outcome of the temporary measures that I mentioned a minute ago. So I mentioned that these people would be people with lower balances, and potentially you could be denying yourself $80,000 in retirement.
Question. Did you have to demonstrate that you lost income in order to be allowed to do it, or could you just say, okay, well, now's a good time to buy a house so I can get a bit more for my deposit? And
I think it wasn't policed.
Yeah,
is the answer.
So it might not have just been people who really needed it. Others might have used
the
opportunity to tap into future savings, kind of thing.
So moving on then to the main event, which is the homelessness and rental housing. We saw 4 state governments taking pretty major action here. And this is, again, something which was in parallel with other countries, where the realization that people who are living in overcrowded homelessness shelter type accommodation, sharing facilities, or actually street homeless, people in that situation were far less likely to be able to maintain a high level of hygiene or self-isolate. So with that in mind, and with the kind of, the immediate sort of anxiety, bordering on panic, in late March 2020, 4 state governments decided to throw a lot of resources at the problem, which really on an unprecedented scale. And so over 6 months, that amounted to 40,000 people being given temporary accommodation, maybe in some cases for 2 or 3 nights, but in many other cases for considerably longer than that. And that was particularly the case in New South Wales and Victoria, but two of the other states also did this on a significant scale as well. So this was a huge and costly operation, logistically very complex, somewhat chaotic in the way it came together, but I think still a kind of positive experience for the entities who were involved. And it was very much a joint effort of state governments and not-for-profit NGO welfare services providers that were suddenly given almost open access to funding to just get this done as quickly as possible. So street homelessness briefly was reduced, not to zero, but certainly to near zero. The number of people who were involved is really pretty extraordinary, and especially when you bear in mind that the point-in-time estimate of street homelessness is across the whole of Australia is 8,000 from the last census. So it certainly gives a bit of a sense that this is, in fact, that point-in-time number gives you a very understated scale of the real size of this problem. So I think that was quite an important lesson that comes through from that. So having given people temporary accommodation, state governments did make or have made big efforts to transition as many of those people into longer term rental housing as possible. And ideally that would be social housing with a quite a high degree of security and an affordable rent, or otherwise a private rental property which might be something that you could afford only with some kind of subsidy or help. More choice, but less suitable for low-income people, certainly vulnerable people anyway. But in practice, only 1/5 of people who left hotels were helped into longer-term tenancies. And all of these numbers, the 40,000 number and these numbers around rehousing, these are numbers that are not published. These are numbers that are not collected by government or were not collected in a systematic way by any of the media agencies that were taking an interest in this, but weren't able to collect the data in a structured way. So and it wasn't that easy to collect either, but we persisted. But I think we can learn some lessons from this, or we can take some hints from this, that what this difficulty illustrates is that it really the shortage of social housing really hits home at a time when you really want to use it to absorb an unexpected problem on a large scale. And the inadequate level of rent assistance also comes through from this, because that is what makes it very hard to make large-scale use of the private rental market. Even when rents have fallen in some places due to the pandemic, that's still a rent in a city location is still huge compared to what people on a benefit income would be receiving. And the fact that there was a disproportionate number of non-citizens amongst the homeless population who were given emergency accommodation, that's another group that were not discriminated against in being offered emergency housing, but the ability to give a longer term assistance to people in that position was very, very limited, because you're not entitled to a social housing tenancy. You're also not entitled to social security benefits. And so this was a short term, this was a remarkable but pretty short episode. And from the middle of 2020 in Sydney and Adelaide, street homelessness began to rise again. In Victoria, it didn't, because the second wave of COVID in Victoria in July, August, September, October last year meant that this scheme had to continue for longer. But subsequently, I think we'd expect that number probably has started to go up again. And these figures are illustrating what happened after the middle of 2020 for Adelaide and Sydney, where the numbers began to bounce back, unfortunately. So to say something a bit shorter about rental policy, temporary rules were introduced to restrict landlords' ability to recover tenancies or to kick people out if they weren't able to pay their rent from pretty much straight away at the beginning of the pandemic. Each state and territory did their own thing. There was no coordination. It was done in 8 different ways, and better or worse in terms of the detail of that. But nevertheless, the same kind of the same general approach and end result. People who were tenants who were in difficulty were with their rent were recommended to negotiate one-to-one with landlords or through a real estate agent. We think from survey data, from our own surveys and from others that we've reviewed in the report, that over a quarter of tenants lost income. Probably about half of that number were successful in getting a rent variation from their landlord, although for some that rent variation was not a reduction, it was only a deferral. It was really just saying, well, I can't kick you out now anyway because there's an eviction moratorium, but I'm not going to hassle you about the fact that your debt to me is rising and we'll have to settle it later. So some people have got a big actual reduction, that's certainly true, but it was for some people only a deferral, and that was storing up a problem which we may not have seen emerge yet. Now that eviction moratoria have finished, again at the end of March, in most states and territories, it could easily be that in the next 2 or 3 months we might see some result of that a delayed problem. So these moratoriums were not a total eviction ban. Their central objective was to protect people who had arrears that resulted from the economic downturn. No grounds evictions were restricted in most states. In other words, you were not allowed to remove somebody without a reason that was acceptable, and selling the property remained acceptable. So to the extent that the housing market for trading housing remained active in 2020, it's possible that you would have been asked to leave a property because of that. But this was generally effective in preventing a surge in new homelessness, and landlords hit by non-payment were themselves being cushioned by mortgage deferrals, many of them. So in fact, the number of, or the sort of concern about that leading to forced sales was not really borne out. So what's the prospect of building back better in terms of housing initiatives that have been prompted by the pandemic for the future? Well, there has been some activity in Australia and New Zealand from a number of governments, state level and national level, to bring forward or to initiate spending programs in the housing area triggered by COVID, or with the idea that this is part of a recovery program. And of course, this is a traditional method of stimulating economies after recessions, whatever the cause. The main emphasis has been incentivizing the private market, has been offering grants and benefits to people who are first home buyers and others buying property, up to $80,000 per buyer in some states, combining the benefits that have been offered through the national government, through the Commonwealth government, and through some states and territories. 80,000 is quite a big, especially in a regional housing market somewhere out of Sydney or Melbourne, is a pretty substantial additional help to people who want to enter the market. There have been some small-scale social housing initiatives enacted by a number of state and territory governments in Australia, on a big scale by Victoria, on an unprecedented scale by Victoria. $5 billion program committed by Victoria that will run forward for 4 years. The New Zealand government has also announced at the very beginning of the pandemic, and possibly not actually prompted by it, but coincident with it anyway, New Zealand government committed to a program of 8,000 new social housing properties over some limited period of time, 2 or 3 years, something like that, which pro rata in Australia would be 40,000. So it's a pretty big deal. But those are exceptions. The general rule is that what the national government in Australia chose to stimulate the housing market only through private sector, and most state and territory governments have given most of their assistance in that way as well. So just to finish off, just to say something very briefly to sort of evaluate some of this. The first way of evaluating it is to talk about how it compares against other countries. The report looks at Canada, New Zealand, the UK, and the US, and it shows that in all of these countries there are quite a lot of similar themes, if not in detail. That income protection has been done through some kind of furlough scheme and usually through some sort of social security enhancement. That evictions have been restricted, although in a more patchy way in federal states where the lower level of government can opt in or opt out. Emergency housing initiatives as far as street homeless people or people in overcrowded homeless accommodation. We've seen that in quite a few other countries, or all of those other countries as well. We can make a direct comparison. The report also tries to make a direct comparison. It has to come with some health warnings, but we thought it was close enough to make a direct comparison with the UK, or the UK government's programme in England to rehouse, to provide emergency housing for actually homeless, and that was around similar in scale to the 4 Australian states, around 30,000 people, probably people who were given assistance for a longer period, but roughly the same quantum. And what we think is very significant there, though, is that by late 2020, 2/3 of those people had been assisted into longer-term tenancies, compared with a fifth in Australia. And that I think is an important comparison to draw. Yeah, I mean, there are plenty of ways in which you could say, well, it's not an entirely fair comparison. It's fair enough, though, I think, for this purpose, and it does illustrate a very real difference in the ability to do that. The other thing another thing that we highlight in the international comparative dimension is that Australia's national government has really stood back from the housing and homelessness parts of this story. It has been absolutely instrumental in the income protection side of it, but as far as housing and homelessness is concerned, it has really kind of washed its hands of the issue and said, go ahead, states and territories. We're happy if you do this, but don't look to us for any funding, for example. No additional funds were provided by the national government for the hundreds of millions of dollars that were spent on the emergency housing program, for example. That's quite different from the other comparator states, even the federal ones. Even in the federal states, in the US, in Canada, yes, the same sort of split is there between the responsibilities at the national and state level. But both of those countries their national governments did a lot more in this area. I think we can say that there are fundamental system flaws in Australia, flaws in Australia's housing system that have been exposed or highlighted through the experience of the last year. The real scale of homelessness is a bigger one than a lot of people often talk about, at least as far as the sort of the most extreme form of homelessness is concerned. The extent of the vulnerability of the system, the need for the eviction moratoria was absolutely essential because of the fact that so many people are very close to the edge of being unable to meet current rent, and the shrunken social housing sector and the inadequate level of rent assistance is a problem that has been growing, building for decades, but most of the time it's easier to ignore than it was over the last year. So what's the government's report card? Final slide. Apologies that it's been a bit long. What's the government's report card? What can we say at a higher sort of level here? I think it's surprisingly a surprisingly purposeful and effective short-term response, both as far as income protection is concerned and in the rental housing and homelessness spheres as well. Yes, non-citizens were excluded on income protection, and that I think a lot of people would say was a big mistake and was extremely unfair. But they were not actually excluded from the assistance that was provided through rental housing evictions or through moratoria or through the emergency housing protection. We saw a brief glimpse of cities with almost zero homelessness, street homelessness, visible homelessness. We saw a rental regulation regime that was rebalanced between landlords and tenants quite substantially. But there are some downsides, which are probably obvious from what I've said so far. We have stored up some problems for the immediate future, and those are somewhere between at least 75,000 tenants, possibly double that number. The survey evidence isn't really that strong, but a big number of tenants got a deferral of rent, not a reduction. And we don't know how hardline landlords will be about coming back and saying, well, that's a few $1,000s now, now that I can ask you to leave or give you notice to leave, I do still intend that you pay that. We don't know how much that will happen, but it could. We've seen an emphasis on stimulating the private housing market through the Home Builder Programme, which is a national scheme, and quite a few state and territory schemes as well, which, with hindsight, are probably a bit of a mistake because they poured petrol on fire. That was a market that, with hindsight, we can see reducing interest rates to that extent was already primed to take off, and that has compounded that has compounded the effect. We've also seen, I think, a reluctance to recognise that there is a need for more fundamental reform, and that was a debate that we in some of us in this room, probably some of us on this call, I expect, attempted to elevate last year, and I think that the opportunity for that is quickly disappearing. So it's not so promising in that area. I don't think that there's clear sign that in our field that building back better is going to be a result of this. Thank you.
Thank you very much, Paul. That was really comprehensive, and we covered a lot of stuff. And so we have another 20 minutes for questions and discussion. So as usual, I would like to start the questions from the online people first. So since the people here have opportunity to go for drinks later, so if you can switch on the chat. So you can either unmute yourself and ask the question, or you can type it on the chat. So I'll read out the questions. Bruce.
Sorry, did you? Bruce Bradbury here. Given What are your thoughts about the demand for rental housing? I mean, given the population issues, there's lack of overseas students, lack of short-term travellers and so on, it's been a bit surprising that rents haven't even fallen further. So I'm guessing that means there are lots of dwellings which are actually empty. Do you think that's the case, and what do you think is going to be the implications going forward on that side?
Well, rents probably have fallen further than was shown in our graph, partly because that was stopped in September, partly because it was at quite an aggregate level. If you look at more detailed data and more recent data, you do see far more dramatic changes than that. For example, some suburbs that some of us know, at least in this room, if not internationally, in Bondi Junction, the average rent in February 2021 was 20% less than it was in March 2020. In Byron Bay, it was 20% more. And in Victoria, rents had fallen over that same period, over that year. In Carlton, another sort of inner city area which would have been heavily affected by far less international students, again by around 20%, whereas in Torquay and Geelong, 14% or 12% higher over that period. So the differences may be, and I think in our next report we'll be extending those trends that ended in September last year, and we'll see whether those lines continue to diverge or whether they actually come back together again. I don't think they will come back together again because, as you say, Bruce, there's been a really dramatic change in demand for rental housing, but it's very geographically concentrated, and the markets in inner Sydney and inner Melbourne, as a result of the disappearance of international visitors and international students, much more dramatically than in the comparative countries like the UK, for example, I think will have probably caused divergence, which is even greater than what our early analysis showed. Do you want to come back on that, Bruce?
Sorry, do you know anything about empty dwellings? Is there any data on that?
Good question. I don't think we looked at that in the report, or Alistair's analysis looked at that in the report. We did look at the number of tenancies that were ongoing. We looked at the size of the market, so there is a bit of analysis of that. I can't remember off the top of my head quite what it showed, but it's a little bit more. That analysis in the report has got more dimensions in it than I've really properly given voice to today.
Cool. Thanks very much, Bruce. Does anybody else have a question, comment? Okay, Hazel has a question. So Hazel has a comment that it would be interesting to do some more work to see how individual renting households or group of households have fared. Anecdotally, I think we've seen that some households traded up over the period to better quality properties because they could afford them, while others who have lost work have lost housing.
Yeah, I mean, I think that point's alluding to. I mean, the bigger picture here is that we've seen a kind of level of turbulence in the rental market, which is absolutely unprecedented in the last year. I mean, the scale of reductions in rents in some places, but not everywhere, certainly not in regional housing markets. I don't think there's anything like it on record. And yeah, I mean, we've to some extent that's the reductions in some of these inner city markets. It's not only because there's less new migrants coming into the country or overseas visitors booking up their Airbnbs. It's also because some younger people, some younger adults have been able to respond to losing their job by returning to the family home and sort of sucking demand out of the market in that way. Yeah, and as Hazel said, it also is a great opportunity. It's a buyer's market, so some people have been able to do quite well out of it by getting a substantially better property without having to pay anymore. And that's a pretty unusual situation that's possible. But it's a situation that may continue for longer than we were thinking. Since we heard that the vaccine rollout isn't going to be finished in October, I think a lot of assumptions have been made about the resumption of normal conditions, and by house buyers as well as more than by renters. And the way that the house sales market has taken off in the last 6 months is predicated on a lot of assumptions about the future, which might not necessarily come through. It's been a kind of a boom that is in defiance of the fundamentals. It's in defiance of wage growth, which is still extremely low. It's in defiance of the net outflow of people from the country. In the last year, in the current year, the budget papers are predicting that there will be not a 200,000 increase in Australia's population through migration, but a 70,000 decrease. So those changes are quite extraordinary, and at what point that sort of ceases to, at what point that those kind of trends go back to what we would think of as normality. A lot of people have been assuming that this is within sight, but actually it's not certain that it will be this year.
Thanks, Al. And there's I'm not sure, it's a question, comment relating to the previous discussion. Sasha says recalls Canadians and possibly Melbourne using water flow data to uncover unoccupied dwellings, with Canadians addressing housing shortage in Vancouver. So,
yeah, I mean that is a method of analysing empty housing, which isn't unfortunately possible in New South Wales because we meter our water differently, I believe. Is that right, Laura?
Aggregate it, so it doesn't work. I was just interested in this point about the regional trends for obvious reasons, but that graph that you showed with the Victorian trends, obviously you see the big drop down, but then that big bounce up after the kind of reopening of restrictions and things. But if you look at the broader trend, it's bounced back to more or less where it was anyway, which was already on an upward trajectory. I was just interested if you have any other insights about how much the bounce or the sort of upward trends we're seeing in regional areas is a post-COVID thing driven by people changing their minds about their lives during COVID, or whether most areas were already on an upward trend and they've just returned to where they were heading originally.
I think the second one is probably right, actually. I think that another report that we published last year, the Australian Homelessness Monitor report, included some geographical analysis over a slightly longer period of changing homelessness numbers. And we classified the country according to, I think it was cities, inner regional and remote or something like that. The inner regional areas were the ones where homelessness had been significantly rising over the previous 3 years. I don't know whether that was well, it's consistent with what you're suggesting, that those sort of housing market changes were already, there was already a trajectory there. And fairly, after perhaps only a very short break at the beginning of the pandemic, we've gone back onto that trend. But maybe it's been given some acceleration as well. And what we don't know is whether that is just going to fizzle, or whether it's something which is going to see a kind of snowball effect.
I'm interested in job keeper.
I mean, is actually withdrawing job keeper might be encourage people engage in labor market, but also in the same time is actually negatively affect their salary and income. Those who are low income. So what is likely impact on rental market? Do you think this?
Well, I think government estimates that the result of the ending of JobKeeper will be an increase of around between 100 and 150,000 in unemployment, which we probably will see in we'll probably see the numbers, I guess, at the end of April or beginning of May. So fairly soon we'll know. But anyway, that's the prediction. So I think that probably will have a dampening effect on the rental market.
Any more questions? So there have been like some discussions in the chat. So one is from Glenn, I guess. It's about UK and how like situation in UK have been different. So in UK we have had a much longer second lockdown. There have been systematic differences across the income spectrum in terms of households have seen reduced expenditure and consequent increased savings, which can feed into the buoyant housing sale market. The demographics aren't that clear, but there is some evidence of exit by some EA migrants and generally low levels of international travel. There are some modest changes in relative rents and prices between central cities, suburbs, smaller towns, from smaller to larger properties, but not that dramatic. There is quite strong political pressure in UK to maintain social security enhancement to extend eviction moratorium. A lot of people are still on furlough and full unemployment effects not yet worked through. So
yeah, I mean, I think it's a scenario which was where the disease was drastically worse than Australia, and is still not is still continuing and is still at risk of taking off again, even now when more than half the population's vaccinated. So the effect that Australia had a 3-month lockdown, more or less, and then in Victoria another 3 months. So the economy was hit, but nothing like as hard as it's been in a country where there's been a need to continue that for a much longer period. The effect here is much more through international travel restriction. That's a far bigger impact. I think, relatively, that's had a much bigger effect here than it probably has in the UK because of the part of the rental market that depends on international students and overseas tourists in the Airbnb part of it, and that I think is those effects are bigger here, a lot bigger here.
One question from me, basically. This is regarding the data that went into the report, right? So the question is like, if you had to do the report again, what sort of data infrastructure and data would you like to have to understand the market more efficiently?
Yeah, I mean, this is not a major piece of research with masses of big bucks behind it. Most of the evidence is qualitative evidence that comes from stakeholder interviews and things of that nature. We did a small online survey, but we mostly used that as a sort of validator against a lot of other surveys that lots of other people were doing, some of them much better funded than ours. What we also weren't able to do, or what we didn't have the resource to do, is to put significant effort into housing market analysis using raw data as opposed to published numbers. So the numbers in those graphs, for example, I showed you before, they're limited by the categories that are used in the published data that the Victorian and New South Wales government publish on the rental housing market. So all of those things are, it would have been a lot better. It would be a lot better to go much deeper into that. In the second phase of the research, we will do again on a very small scale, but we will do something additional to all of that on a very small scale, which is that we will interview a small number of ex-homeless people, or possibly current homeless people who experience the emergency housing programme, and hopefully we'll be able to compare the experiences of people who got a good outcome because they got rehoused into longer term housing and those that didn't. So that will be a little bit of an extra dimension that the report we published so far didn't have any of that in it.
So we have like Hazel has a comment on a presentation shared in it by a demographer towards the end of last year who was
Sorry,
predicting.
Val, I can speak to it.
Yeah.
Just my cat's meowing in the background, so you can all be entertained by that. I was just out of interest, really. I guess the broader issue is around there may be substantial demographic impacts from COVID that will affect housing markets, and therefore probably housing policy interventions into housing markets for quite a long time. So she was predicting, I mean, it's all predictions, but she was predicting with less immigration and reduced births that we'll see an increase in average age of residents in Metro Sydney. Was talking about the implications of that in terms of desires in the private rental market, in terms of types of dwellings and tenure opportunities. Yeah, so just to kind of, there are going to be ongoing policy implications of the ongoing demographic changes that are going to be the result of the last year.
Yeah, and I mean maybe some of that will also play into what we've already seen in the way that there's been a real preferencing of houses versus apartments, and you know, I don't think we've seen an end to that at the moment. And I heard a kind of speculation just today, actually, that one possible explanation, or one contributory factor to that, could be that the very large number of expat Australians who've returned to Australia in the last year need somewhere to live, and it may be that they're more interested in renting a house than an apartment, whereas the migrant intake that we normally have is liable to be sharing apartments.
It could also be a reflection of that trading up. You know, Bruce's question about, are there empty properties? If those empty properties are primarily in apartments, because people are moving out of apartments and into houses where they can afford to.
Absolutely, yeah.
Cool. I think like we're coming to the end of the meeting, so we're almost 4. So thank you very much, everyone. I think we have like the strongest, largest number of attendance yet, like for the third version. So we have around 35 people. So that was like really encouraging, and I think we are still getting like everything down, getting the organizing the event like better every time. And so now we can. So White House is shut down because of some event today. So basically, we're going to move the reception and like drinks to the roundhouse.
So is there another seminar plan that you want to break at this point?
Next one, we're still finalizing the speaker. So once we have that, like Ali would send a invite announcing the seminar.
But it's a 2-weekly cycle that we're working towards, isn't it?
Yeah. So this one is like kind of off because of like the public holiday. But from now on, like we have like 2 more events for this term. So in 2 weeks we'll have one and then another one. So therefore the term concludes. So thank you very much for attending, everyone, and hope to see you in 2 weeks.
Thanks, Val.
Thank you.